Mortgage default surge in New Zealand. Let's have a look.
Auckland families are going default on their mortgages. $2.448 billion in non-performing housing loans across New Zealand. That's the latest figure from the Reserve Bank, May 2025. Within that, $534 million is classified as impaired, meaning the banks have serious doubts these loans will ever be fully repaid. And that number jumped 6% in May alone. 3 years ago, non-performing loans sat at 0.2% of all mortgages. Today, we're at 0.7%. That's a 250% increase. And Auckland families are right in the firing line because this isn't some abstract banking statistic. These are real people, mums and dads who bought homes at peak prices in 2021 and 2022, locked in mortgages they could barely afford, and are now watching their payments skyrocket as fixed terms expire. In January 2025, non-performing loans surged by $165 million in a single month. That was the biggest monthly jump since June 2020 during the pandemic. Banks are projecting non-performing loans will stay at 0.7% through the end of 2025, possibly higher if economic conditions worsen. And here's the kicker. Auckland has the highest average mortgage in the country at roughly $810,000. When you're carrying that kind of debt and your fixed rate rolls off 2.5% onto 5.4%, you're facing an extra $2,000 a month in payments. For many families, that's the difference between staying afloat and defaulting. According to the latest hardship data, 15,000 New Zealand families are in formal financial hardship. 46% of those cases are directly related to mortgage payment difficulties. That's nearly 7,000 families who've had to go to their bank and say, "We can't afford this anymore." 40% of Auckland's fixed-rate mortgages are repricing between December 2025 and March 2026. That's hundreds of thousands of households facing the same payment shock that's already pushed 24,000 Kiwi families into arrears nationwide. Auckland company liquidations are up 33% in the second quarter of 2025, the highest regional increase in the country. So when the Auckland Mayor acknowledges the scale of this crisis, when banks are reclassifying billions in loans, when families are choosing between mortgage payments and putting food on the table, this isn't a headline. This is a financial catastrophe unfolding in real time. In this video, we're breaking down Auckland's mortgage default crisis from 3 angles. First, the scale of defaults, what $2.448 billion in non-performing loans means, and why Auckland is more exposed. Second, the families facing financial hardship, the 15,000 cases, and what happens when you can't make payments. And third, what comes next, whether defaults will peak or climb higher. Let's get into it. As of May 2025, New Zealand has $2.448 billion in non-performing housing loans. Within that total, $534 million is classified as impaired, the worst category. That $534 million jumped 6% in May alone. Since December 2024, impaired loans have increased by $285 million, a 13.2% jump in just 5 months. Now, 0.7% might sound small, but we've gone from 0.2% to 0.7% in 3 years. And while 0.7% is still below the global financial crisis peak of around 1.5%, the trajectory is concerning. At 0.7%, roughly 1 in every 143 home loans is non-performing. That's tens of thousands of families. The January 2025 data showed a $165 million monthly surge, the biggest single-month jump since June 2020 during the pandemic. That suggests defaults are accelerating, not stabilizing. For Auckland specifically, the exposure is worse. Auckland's average mortgage is around $810,000. When you've got a larger loan, every rate increase hits harder. Every unexpected expense pushes you closer to the edge. According to Centrix data, 24,000 home loans nationwide were in arrears as of March 2025. That's the highest level in at least 8 years. And Auckland, with its high mortgage sizes and stretched affordability, 7.7 times income, is disproportionately represented. Let's talk about the human side. As of the latest data, 15,000 New Zealand households are in formal financial hardship. That's up 14.4% year on year. Of those 15,000 cases, 46% are directly related to mortgage payment difficulties. That's nearly 7,000 families who've reached the point where they had to contact their bank and enter a formal hardship arrangement. What does hardship mean? It's when you go to your lender and say, "I can't afford my mortgage payments anymore." The bank can offer temporary relief, payment holidays, reduced payments, interest-only terms. But these aren't solutions, they're band-aids. Interest keeps accruing. And when the hardship period ends, you're back to square one, except now you owe even more. The ages hit hardest are 30 to 50. Why? Because they took on the largest loans during the 2020 to 2022 boom. They've got kids, car payments, childcare costs, and when mortgage payments jump from $3,000 to $5,000 a month, there's no room left in the budget. Let's run a real scenario. A couple buys in Auckland in early 2022 for $1.1 million. They put down 20%. Their mortgage, $880,000. They lock in a 2-year fixed rate at 2.8%. Monthly payment, roughly $3,300. January 2024, their fixed term expires. They refix at 5.8%. New payment, $5,800. That's an extra $2,500 a month. They're spending 66% of take-home pay on the mortgage alone. It's unsustainable. They cut back on everything. Cancel streaming services, stop eating out, delay car replacement, but it's not enough. They max out credit cards. 3 months in, they're $15,000 behind. They contact the bank. Hardship application. The bank freezes payments for 6 months. 6 months later, the hardship period ends. They owe the original arrears plus accrued interest. The bank says, resume full payments or we'll start foreclosure. The family has 3 options. Sell at a loss. Auckland prices are down 20 to 23%, they'll lose equity. Extend the mortgage term to 35 or 40 years, decades more debt. Or try to refinance, but they probably won't qualify. This is the reality for thousands of Auckland families right now. And it's about to get worse because 40% of Auckland's fixed-rate mortgages are repricing between December 2025 and March 2026. Why is Auckland more exposed than anywhere else in New Zealand? 3 reasons made this happen. First, mortgage size. Auckland's average mortgage is around $810,000, significantly higher than the national average. When interest rates double from 2.5% to 5%, you're looking at an extra $2,000 to $2,500 per month. For a family earning the Auckland median household income of $120,000 to $130,000, that's devastating. Second, affordability. Auckland's price-to-income ratio is 7.7 times median household income. That's severely unaffordable. Even after prices fell 20 to 23% from peak, we're still at levels that were considered expensive pre-COVID. Third, economic stress. Auckland company liquidations are up 33% in the second quarter of 2025, the highest regional increase in the country. When businesses fail at that rate, jobs disappear, and families already struggling face additional pressure from job insecurity. There's also the repricing wave. 40% of all fixed-rate mortgages are due to refix between December 2025 and March 2026. In Auckland, where mortgage sizes are larger and affordability is worse, that repricing wave is going to hit harder. And here's the compounding factor. Auckland homeowners who bought at peak have lost significant equity. If you bought in January 2022 for $1.3 million and your home is now worth $1.05 million, you've lost $250,000. If you only put down 20%, you're barely above water. If you put down 10%, you're underwater. So you're trapped. You can't sell without taking a huge loss. You can't refinance because banks have tightened lending. Your mortgage payment has nearly doubled, and you're one job loss away from default. The critical question is, did we just hit the peak of defaults, or is it going to get worse? Banks are projecting non-performing loans will stay at 0.7% through the end of 2025. But that assumes economic conditions don't deteriorate, unemployment doesn't spike, and the 40% of mortgages repricing can absorb the payment shock. Those are big assumptions. Let's look at the headwinds. First, the labor market. Unemployment is rising. GDP contracted 0.9% in the June 2025 quarter. Job market uncertainty was the biggest macro headwind in 2024, and it's still a major factor. Second, the repricing wave. 40% of fixed-rate mortgages due to refix means hundreds of thousands of families facing payment increases. Not all will default, but some will. Third, the lag effect. defaults don't happen immediately. Families exhaust savings first, max out credit cards, sell assets. Only after all options are gone do they default, so the full impact of the 2023 to 2024 rate hikes might not show up until late 2025 or early 2026. On the flip side, there are stabilizing factors. The Reserve Bank has cut the OCR from 5.5% to 2.25%, 325 basis points of easing. Mortgage rates are coming down. The average mortgage yield has fallen from 6.39% at peak to 5.17%. That's relief for families refixing now. Also, forced selling remains limited. Banks don't want to foreclose. They work with borrowers where possible. Hardship arrangements, payment holidays, term extensions. These delay defaults but don't prevent them entirely. The most likely scenario is defaults plateau around 0.7% to 0.8% through 2026, then slowly decline. But if unemployment spikes or another shock hits, we could see defaults climb to 1% or higher. For Auckland specifically, the concentration of high-value mortgages means the city will continue to see disproportionate stress. Auckland families are defaulting on mortgages at rates not seen in 8 years. New Zealand has $2.448 billion in non-performing housing loans, with $534 million impaired, up $285 million since December. Non-performing loans have surged from 0.2% to 0.7%, a 250% increase in 3 years. 15,000 families are in formal financial hardship, with 46% of cases tied to mortgages. Ages 30 to 50 are hit hardest, borrowers with the largest loans, and no buffer when payments jump $2,000 to $2,500 per month. If this analysis helped you understand the situation families facing across Auckland, hit that like button and subscribe to Kiwi Property Reports. We're tracking this as it unfolds. Drop a comment if you're facing mortgage stress, share your experience, and if you found this valuable, share it with others who need to understand the reality. Auckland's mortgage default crisis isn't abstract. It's $2.4 billion in non-performing loans, 15,000 plus families in hardship, and tens of thousands more facing payment shocks in the coming months. The numbers are rising, and the pain is real. Thanks for watching. I'll see you in the next report.